of the book there. And you can see that after that bullishness gave way to the bears, it's never really found the buy side of the book coming back in. So we bought into this low print here. We bought into this low print, but the book stayed bearish right through that whole phase. Still kind of bearish as well in the background, isn't it? So we've just got to be aware of the fact that the book was bearish. And that obviously means that from this point here, we can obviously start thinking that this is what should be happening to the price. The sellers came back in once we ran the stops at the top edge up here, drove the price back down, and I'm not going to buy it again in here because the book was a little bit too bearish. But this is obviously a different story. You know, we've definitely got some opportunities to buy back in at those slightly lower prints. Just running stops to get liquidity so far this morning. That's the kind of day it's been so far. Very, very stop hungry kind of morning so far. Just trying to find some liquidity from somewhere because it's quite thin. And just again, buying into the new low prices so far has made a bit of sense. So buying into, for example, on the Dow Jones, this 480s, just running down into the next level, stops running into the next level, into the 480s, and the book going bullish, just buying back in again, and then doing the same with the S&P. The S&P, we did exactly the same trade. Just bought the bottom edge. With a nice lean against the bottom edge as well, by the way. I'll just pop the S&P on this screen as well. So what happened on the S&P was exactly the same. We just came back down into the stops just here. There's the stops. The book was bullish into the bottom edge here. Kind of rotational feel about it. There's the lean opportunity to lean against right there. And a very easy money buy trade to run back off the 90s and back up there to the quick 95 for a very, very quick profit on the trade. So a reasonable trade, reasonable outcome. As I said, it's got a kind of rotational feel about it. I'm not really too concerned about the buy side or the sell side. I'm just kind of more concerned about just rotating some of these little stop runs, some of these little liquidity grabs, and that's what we've seen. Everything's been about liquidity so far this morning. A little bottom edge stop run on the Dow Jones, a little bottom edge stop run here, stop run here, stop run here, stop run here, and the same on the S&P. A little stop run here into the bottom edge, a little stop run here into the bottom edge, and it's always just found stops as a liquidity reversal trade. So that's the way it's setting up so far this morning. Any stop run is a reversal trade opportunity until value starts either establishing or disappearing. So quite an easy morning start for us. Congratulations if anybody's done any business on the S&P and made some nice money. It's not been the most difficult. Just a couple of little crappy auctions. Long-sided bonds for me, obviously, just now still running into the high prices. We've been pretty much long since the inception of the London session going into the US session. It's been short bond earlier doors this morning. Sell side top edge, buy side all this bottom edge, massive amounts of buying. And obviously we've just managed to keep the long bond in play. Still making some progress to the upside, as I mentioned before. We're selling. Very obviously, the reason why we're buying bonds is what reason? And here it is here, guys. It's not that difficult to recognize it. Selling the 2s, 5s in line with the 5s, 10s. Exactly what we discussed in classroom this morning. And we obviously just have to be very, very mindful of what's happening on the 10s, 30s. The 10s, 30s, definitely with a slight leaning bias to the sell side. And selling into those exceptionally high 2s, 5s, buying into low price bonds. Not that difficult to make money today again, guys. Not difficult to make money on the long bond in that environment. You might be thinking, long bonds, short equities. Yeah, absolutely. Absolutely. But, you know, we've still got to just keep playing what we're seeing. You know, there's a buy and a sell available in equities today. It's not just one-sided. It's a buy and a sell because it's inside value, remember, guys. This was a big rallying market from yesterday. So this is not a big drop. This is just an inside game. Look, see it? It's just an inside game. It's not a big move. It's a tiny, tiny, tiny little squidge of a move. The big move was this macro gain that we've got in the background. That's the big move. This is the small, cheap, crappy rotations that we have to deal with as traders every day. We've got to look inside these rotations, see that we're in a bull market, understand that we're in a bull market, and trade accordingly inside that bull market. The bond has just kicked on beautifully, guys. So we talked about being long bonds. Congratulations if you were in this trade. We've just absolutely destroyed it. Who's with me on the long bonds? Anybody? I assume everybody. I assume everybody's with me on the long bond, yeah? We did shout at earlier about selling 2s 5s. We talked about it way back here. So selling 2s 5s means long bonds. That's keeping a bit of pressure on the equities in the short term just now, guys. I'm seeing a few algorithms running into the short side of the. Yeah, I'm seeing a bit of short pressure coming in on the S&P now. So there are some sellers, some algo sellers now working on the short side of the book. So that's taking me away from trying to bid into this just now. So quite happy just to let equities fall through. There's on the back of the selling that's coming in oil off the 62.20s, 61.20s as well. There's some selling coming into this trade here, running the price down. I am not short oil just now. A pity because it's a nice looking trade, and I possibly missed my chance. But we'd seen an opportunity to work into some short businesses that drove below 61s. But I must admit, I was sitting just above here at 61.25s. Trying to be patient, trying to be patient up here, but it never traded back up into that for the sell trade to work for me. So I'm afraid, in my case, I've missed my deal on the sell-off here, which is a bit of a pity. You can see that there was a big difference in the way that the inflation expectations reversed. I mean, is that a good indicator of what, guys? We introduced you to this line a few months ago. But take a look at how good that line is for the buys and the sells. Is that not sensational? That inflation expectation leading into that top edge sell on bond oil. Something's not right. Your job, of course, is to try and identify what it is that's not right. So that little inflation expectation read, you can obviously look at your A's and your C's. And this is where the trade did show up. Because obviously at that stage, whilst you might miss the oil trade, you can see that the actual trade was actually selling the A's and the C's. So you could have been looking at that saying, okay, well, how do I get into? What can I get into? Where is the deal? Well, the deal's pretty obvious. It's dollar CAD longs. So when you're looking at dollar CAD longs at that stage, when you're looking at dollar CAD longs in here, this is at 14.25. Well, at 14.25, guys, your dollar CAD, even though oil prices have now sold, your dollar CAD made this beautiful reversal candle right there at 35s. It was a brilliant opportunity to take your oil trade if you missed your oil trade. So that's something that you should always be looking for if you do miss your oil trade. If you've missed that opportunity because it's sold off and you just haven't managed to join in, there may be another opportunity to take advantage of the same trade. If you're selling oil and the oil is now sold and you can still get a dollar CAD long position, take it. It's the same deal. And obviously that dollar CAD's had a very, very nice rally from 34s up to 54s for 20 pips. Don't be scared to express your trade in a different market. It's still the same narrative. It's just a different asset class that you're able to get that little bit of value against. That's why we talk a lot about gilts and we talk a lot about bonds and bunds, because sometimes you might miss the trade on the ultra bond. If you've got access to the bunds and the gilts, you might find it in one of those two markets. You might find it on one of those two markets, guys. And that's what you're obviously trying to look for, right? You're trying to find the best value. Once you find the best value, game's a bogey. But anyway, take a look at what the Chinese are doing on oil today. And there's no real surprise about how this top edge did develop. You can see at the bottom edges there was a very, very big demand from China to buy oil. Now, obviously, we have to double check against that, against the US markets. And you can see that the Chinese are also buying against the US markets. That puts a big bid into oil at the bottom edge, doesn't it? And we get this brilliant rally off the bottom print price. Well, you can see that into the top print price. If I just zoom into that top print price, you can see that China starting to show up a little bit of short side here on both markets, against the US and against the euro. And, you know, that's obviously, you know, hindsight's a wonderful thing, guys. I didn't get the trade, and you know, if I look back at it a few times, maybe there was a way into this trade, but you know, I didn't get it, but I did get the Canadian. But when you look at it from a calendar spread point of view, bit of divergence creeping in here, and you can see that you should have been maybe working a little bit harder than I was on oil. But when you look at the Brent spreads, this is the reason why, my initial reason why I just simply wanted that little bit higher to sell into that higher print, because we weren't seeing any calendar in favor of the short position at that stage, and I had to just be a little bit more patient for the top edge to form, and it just didn't form quite fast enough for us, guys. So it is what it is. You don't get everything. You don't get every swing, guys, and there's no point in worrying about it. You just you trade what you can see. The bonds have been sensational. That bottom edge running into top edge headway. We've got a little bit of a headwind at the top edge here at 95s, pushing the price back off the highs. Keeping busy on that trade, guys. Keeping busy on it. Equities off the low. The specs came back in on the buy side of the book, and they've rotated it aggressively off the low prices. There was a retest back into the lows, so if you decided to take the retest back into the lows, that's all right. Reasonable. Reasonable. You can see the specs came in behind sell side, but they went bullish here. There was the retest back into the low here, but it didn't quite run the stops, unfortunately, to allow you the easy way into a trade, which would have just been a stop run here. So you had to decide to cross if you wanted to get the business on the books. You know, it's something that you've just got to be watching. Now, there was a bit of structure that would have started to help you out with this trade, because you've got that trade there in this pullback, so you would already have been aware of a little cheeky bit of structure that might just have helped you on this occasion. And you should be doing this regardless, and you can see that there would be buying at this price point in any world. It doesn't matter whether there's supply coming in or not. You can see that there would have been a reason for buyers to show up at this line because of the structure that was in the background from this area here. And based on that, you might have been able to pick up that little cheeky bottom edge here. And that's been a very reasonable response back off that print there, guys. Beautiful. There was book buyers on the Dow Jones. They've pushed the price up. I don't see any algo buyers. The algos that I've seen so far have just been sellers at you know, on the momentum shifts. They certainly haven't showed up as buyers yet. So looking like, to me, a top edge reversal again until we start seeing some real value developing on this. We've just seen the S&P run some stops at 95s, and they did drop it back down to 92.5, but the value is not great for the short trade just yet. You can see that from, again, the specs, just giving you this higher high look. So the intention, of course, would be to run this trade back up through the top edge here and see if we can get a little bit of a lift up through that area, wouldn't it? That would be where you'd expect to see some business happening. So book buyers still visible. Dow Jones got a top edge to squeeze as well. That's visible. So we're expecting this price to keep going up through this pink line, and it's going up through this pink line. So if you bought anywhere, you should be buying into that red candle just here. That's the before she goes kind of squeeze trade, trying to take advantage of that liquidity just above it, just there. And you can see that that little red candle there would have given you the perfect BSG squeeze trade level. And that's where your buy trade should be. That's the trade that I've just got on, again, there on the S&P, just bought into that little phase. And with the intention, obviously, of squeezing into this price, which has just happened. So I am going to take a little bit of money. Thank you very much. Yep, that'll do. Just taking a little bit of money on the S&P there for the squeeze. Beautiful. And successful. Successful little push through, right? Beautiful. So you can see just from that little trade, when I just told you that we would be going for the squeeze, you could just have bought into it. You don't have to buy a bottom edge. You don't have to buy, you know, down towards this low. You don't have to try and fade it. You can buy anywhere during this phase, so long as the value is still in place, right? That's what we've just done, and that's how we've made some easy money, guys. That's the easiest trades on the planet. if your trades, if your book is made up predominantly of buys around this area here, for example, or sells around this area here, for example, if that's what your trade book is made up of, I can guarantee you'll be struggling as a trader, because you're buying as a commercial, which means you have a natural inclination to be struggling because you always buy down moves and you always sell up moves. If you get into the habit of buying easy money squeezes and just taking easy deals, life can be very, very simple for you if you just take those types of trades, guys. It's all momentum built. It's all built around the idea of continuation patterns, momentum patterns. And every time we've given you a squeeze trade so far today, they've always paid out very, very quickly. You don't have to wait around for your money. They pay out kind of rapidly. And that's obviously something you should think about if you're trading and you're struggling.